Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, April 5th, 2021. And here are our top stories. New trends emerge as the digital economy continues to be globalized and automating the advisor processes for search, selection, and account management. Joining me now to discuss this and a lot more is Ray Connolly. He's Chief Executive Officer for Benetic Inc. Ray, great to see you. Thanks so much for joining us on the program this morning.
Oh, Jeff, thanks for having me on today. Excited to talk to you.
Yeah, well, we're excited to have you. And we're going to get to what Benetic is and what you all do in the second segment. But you have a lot of experience working in Silicon Valley, a lot of experience around financial technology and technology in general. And I figured we'd first start with getting your assessment in general about the innovation and opportunity coming out of not only the Valley, but also different parts of the United States with innovation and ideas for financial technology.
Well, thanks, Jeff. That's an awful lot to kind of cover. I guess for context to think about where things are going, I could look back at where we've been. One of the first fintech deals I invested in was Financial Engines back in, I think it was 1999. And then an online record keeper in the year 2000 called mPlanet. And the difference that 20 years plus has made in the market at a certain level is almost not even recognizable, right? Because it's taken this long for the industry to absorb and adopt new technology, and yet we still run some back-end systems on COBOL because it's so deeply embedded in how we do things. And yet the web and the internet have finally taken hold of the consumer in a way that I believe the retirement industry is starting to get to really take advantage of it. And I see a technology arms race really starting to build up. When you think about how managed account services, as an example, can now be brought to the individual or customized or tailored in certain ways using participant data, I think there's a big opportunity there. I see a lot of innovation around how investment vehicles themselves can be constructed using new types of technology, and the distribution of those services as well. And a lot of people talk about blockchain or see what's happening with cryptocurrency as another vector of financial innovation, which is going to have huge impact on, let's say, the traditional investment banking industry, but it's not going to hit retirement for some time. We're having a hard enough time getting things like private equity put into retirement plans, let alone Bitcoin. But the underlying technologies of blockchain, a distributed database concept, can be leveraged to help, plan data portability, for example. I think the Spark Institute's been working on ideas around that type of thing. So I think there's a lot of things that the technology can do to both help participant outcomes by giving them more choice, help the service providers get better margin because they're going to be able to eliminate a lot of inefficiencies and also be smarter in how they market things. So there's a lot of change underway.
Yeah, and from what I can see from the outside looking in, a lot of real positive change. And it looks like consumers, whether those consumers are individuals of all different stripes or businesses, they are very much open to using this new technology. And we've seen this with the COVID pandemic, where people that are my parents' age in their 70s are doing more of their banking online. So now they're Zooming or FaceTiming with their children or grandchildren. So it seems like the adoption has really sped up, both from employers and employees.
I think COVID has caused the whole world to accelerate technology adoption in a way that has never happened before, out of necessity. But now that it's been done, we're not going back to the way things used to be. It's now socially acceptable, for example, to have this call on Zoom instead of doing it in person. The ability to get business done faster because you can do it over Zoom or online isn't going to replace personal interaction, but it's definitely going to accelerate it and augment it. So when you actually do get together in person, it's more meaningful and focused. But that same technology adoption for something as basic as meeting has also driven people to use online tools that may not have been as accustomed to doing it in the past. You think about how many people had to suddenly learn how to work remotely, which meant I can no longer walk over to the copy machine and then hand a piece of paper to the person in the office next to me. You really did have to learn how to use the PDF or the ways to share documents or share your Google Drive or your Microsoft Drive, those types of things. And because of that step change in what technology forced people to do because of COVID, is now become a productivity enhancer for everyone that is now part of that same technology ecosystem.
Yeah, well, I certainly agree that we are not going back. Question for you, Ray, about security, data. This quick move, for lack of a better term, this expeditious move. We'll use that term better. To technology over the pandemic, I think has raised some concerns many have around cybersecurity. Not that there are gaps, but we're putting all this data out there. We're moving people who may not be educated about how to protect your data. If you're using a mobile app, how do you protect the password, the username, all that kind of stuff? Does that raise a pause for you and your colleagues in the financial technology field? How do you balance all this great innovation? How do you get transactions transacted at a lower cost with greater frequency, but also balance that with protecting privacy and data, which is, look, that's a huge commodity. That's a very important commodity these days.
So this has created or opened Pandora's box of risk with respect to cyber attack. When you look at the pre-COVID approach that most companies took, they created firewalls, they had badges and security for who had entry and access because they were focused on the facility, they were focused on the network, and they said, let's build a hard barrier around that and control what kind of comes in and out, both people or data. COVID destroyed that defensive model and exponentially increased what we call the attack surface that criminals have in terms of accessing your systems, because now you're accessing it over an unsecured home network to get into work. Your home isn't secured either in the same way. And so all of the traditional methods that people relied upon in your layers of cyber risk protocol, a couple of the most critical ones, which were around the physical layer, are gone. And so the need to re-architect or redesign your cybersecurity governance, risk, and compliance methods is imperative right now. And people who don't realize they have to completely rework it are really in for a big surprise.
Ray, last question for this segment. You mentioned blockchain, which is and crypto. Blockchain is the underlying technology of cryptocurrency. And we've seen this great run up with Bitcoin as one of the most popular brands of crypto. But where do you see kind of crypto evolving to, at least in the retail market? Are we all going to be using, myself or my parents going to be using cryptocurrency in the next 1 year, 5 years, 10 years? Or is it really still more going to be an institutional play and maybe high net worth play?
Well, I think I turn the question around and say gold has been around for a long time, but I don't see people walking up to Starbucks and plunking down gold to buy their coffee. But yet gold's a store of value and interesting asset. So think of Bitcoin as digital gold. It's going to be a store of value, maybe one that's appreciating, but it's not necessarily something you go and easily buy stuff with. You can buy a Tesla with it, but I think that's an extreme example. There are other versions, though, of cryptocurrency, be it Ethereum and literally 1,000 other variants of this technology, that are trying to innovate on different forms of payment methods. And so I think if you look at how technology tends to evolve, and this is a new abstraction layer for enabling financial transactions, we'll still do business the same way we've done business. I can use my credit card, I can still use my bank, but how does the plumbing get made more efficient? How do banks transfer money between each other? How does my credit card get reconciled? Or how does the payment from me to the Starbucks back to the bank all get processed in a way that eliminates a lot of processing fees and makes it more efficient? So those are, to me, the blockchain is going to bring a lot of efficiency to the process and create a lot of value for the early adopters who understand how to leverage this.
Yeah, really interesting, and it's fun to watch kind of this technology evolve and emerge and develop into what it has become. Ray, I want to take a very quick break. When we come back, we'll talk to Ray about Benetic. What is Benetic? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score, a credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Ray Connolly. He's Chief Executive Officer of Benetic Inc. Ray, thanks so much for staying with us this morning.
Oh, thanks, Jeff. This has been fun.
Yeah, look, I love talking to people who are innovating, and you and the team of Benetic are certainly doing that. First, let's start off with what exactly is Benetic, and what are you trying to achieve through the technology?
Oh, sure. So Benetic is a platform on the internet that brings together different participants in the retirement industry, starting with investment management firms, record keepers, and advisors and consultants. Each of those parties have complex relationships today, and we seek to preserve and augment those relationships, number one, and recognize that the process that they use today to interact with each other is fraught with a lot of inefficient activity, manual data entry, a lot of paperwork that's replicated. And so we said, how can we streamline those inefficient processes? How can we make everyone's life easier and reduce their cost of interaction? So as an example, if an advisor wants to put together a proposal for a plan sponsor, they currently have to contact multiple record keepers, request quotes. They might want to talk to a few of their fund wholesalers to figure out the lineup. Maybe they want to get a 338 advisor in the mix. There's a lot of different moving parts here. Maybe they want to include a third-party administrator. And so each of those parties need different pieces of information. It's typically communicated either over the phone or in email. And then the advisor's stuck with a bunch of information to collate into something thoughtful to present back to their client. What we've done is take that process, which takes a few weeks, and you can literally get it done in 5 minutes. It takes you from entering in who's the plan sponsor, and we can pull 5,500 database, let you check it because that data is always stale anyway, make sure it's right. And then you instantly get some quotes on that business with complete level of specificity you'd expect from a full-blown RFP. That then allows you to deliver a fully formatted heads-up proposal to your client, or you can do a benchmark with it as well. And that process, while it's free to the advisor, saves them a ton of time. So it's a huge productivity lift. It allows them to discover services they might not have otherwise been aware of. It's a time saver for the record keeper as well, because they still know the proposal happened. It gives their wholesaler an opportunity to contact the advisor if they're interested in understanding more about the opportunity. And it also allows the record keepers to really differentiate their value in the context of that particular plan sponsor's needs. So, if you had an acreage correction or something, maybe that plan sponsor really cares about administration or the level of service more than certain things. Or maybe if they got hacked, as we were talking about before, cybersecurity really matters. So there's different places each of the record keepers kind of differentiate their capability. And we allow them to not only express their capability in a differentiated way, we also allow the advisors to say, this is what the plan sponsors value and look for. So this is no longer a conversation about price. It's a question of value. Who's delivering the value that matches what's going to best serve those clients? In the same way on the fund side, you can see it in terms of getting the best match of funds. How do you think about the best way to select a target date fund based on the demographics of the plan? How do you think about active management versus passive management, and making sure that, if you're choosing an actively managed fund, that it's delivering the value that you're paying those extra fees for. So we're really helping everyone kind of come together and be more efficient in that process and make it more easy to communicate value, so that at the end of the day, the plan participants are going to be better off with their ultimate retirement outcome. And it's simply not about fees. It's about the value at the end of the day.
Well, I'm someone who can definitely attest to the complexity, the unnecessary complexity of today's RFP process. As you described, I was kind of going back in time and thinking about how I don't want to do any more RFPs again. But in all seriousness, Ray, you mentioned the retirement ecosystem. It's a complex ecosystem. You mentioned the record keepers, the asset managers, the consultants, advisors. How receptive has the marketplace been to someone like yourself who's basically seeking to streamline the process? I would think they'd be very receptive to it, because I think of all the person hours that you lose making those phone calls and sending voluminous emails, reaffirming a bid. I mean, that is a lot of potentially wasted time. So how receptive have these constituencies been to your service?
Well, in the beginning, there's a lot of hesitation, skepticism. People are just by nature slow to change behavior, right? And naturally skeptical, especially when you make a big claim like we're making. However, after we have people use the system, it's a whole different ballgame. Suddenly they start telling their friends, and it's grown very viral since then. So we've had dozens of firms signing up since we launched this back in January, and a tremendous amount of proposals now flowing through the system because people are getting that value. And at the same time, it's gotten quite a bit of attention amongst the record keeping community, because they see this as a source of not just more efficient way to do business with the advisors, but it's getting them in front of opportunities they wouldn't have seen before as well. So once people try it, they love it.
And then in terms of the employers who the consultants, the record keepers, and the asset managers are serving, I'm assuming that, just knowing the RFP process and how long it can be because you're gathering the data, you'd have to wait, time to get all the proposals in, as you said, do the analysis. Now you can go wham, bam, boom. It actually speeds up the way you can change your plan. So are you seeing plans adopt more technology and changes and service changes as a result of the expeditious nature of the program?
I think it's a little too early to have an opinion on that yet. It's only been 3 months of activity so far, and as you know, it takes months for an advisor to go from the beginning proposal to actually having the plan sponsor do something. So I'd say let's circle back on that in a few months and we can kind of give you some indication. But right now, I think advisors are just simply saying, wow, this is a way to get a lot more done in less time. And it hasn't gone to that next step of the plan sponsors realizing that their advisor now has a secret tool in their toolbox that's helping them be more efficient.
Yeah, but I'm just saying anecdotally, I've been to so many of these meetings where these quarterly meetings where you just kind of talk about the same thing over and over again every quarter, right? The returns, the fees, negotiating the fees. This actually allows you to kind of change the conversation a little bit more. And I think one of the things that just in general with the retirement industry is we've kind of been stuck talking about the same themes. Now with the opportunity to kind of drive more change. And I'm just saying anecdotally, you may not have the data yet.
I would expect this will accelerate those conversations for sure, because once the capability exists, as a fiduciary, you should take advantage of it because you can start to be more responsive. You can start delivering even better service to your clients with less effort. So anytime the fiduciary conversation comes into play, for an advisor to look at this as an opportunity that is going to be marginal, if not zero work, to deliver that extra value to the client, they absolutely will start doing that.
Yeah. Well, now you have me wanting to maybe go back into advising and consulting. It's something I'm going to have to think real strongly about. Ray Connolly, it's a pleasure chatting with you. I appreciate you coming on the program, talking about the financial technology marketplace, but also Benetic Inc. Thanks so much for joining us. We look forward to having you back on the program again very soon.
My pleasure, Jeff. Thank you so much.
Thanks, Ray. Great to see you. Thanks for sharing your perspective. And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse, and of course, our website. We're back again tomorrow, so until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.